Hello traders, I hope you all are doing well. Guys, today I'm going to share with you a very unique strategy, and this strategy will include two moving averages. The first moving average that I have used for this strategy is 20 period moving average. As you can see here, the purple line is 20 period moving average. The another moving average which I have used here is 200 period moving average. Guys, when these two moving average are together onto the chart, they work in a very significant way. So they are like brothers. When they are together, they are more powerful. If you use them alone, they are less powerful. Alright? So after you understand this strategy today, I believe that you will never watch your charts without these two moving averages, because the way you look at your chart after watching this video will be totally different from today onwards. Alright, so let's dive into the video. First of all, we got to set some rules to understand this strategy. So rule number 1, your 20 period moving average must be inclined. Alright. Rule number 2, 20 period moving average must be above 200 period moving average. Right. Rule number 3, we have the price must be near the 20 MA. Alright. And rule number 4, and the final rule, one of the 3 events must happen. Okay, so what is the 3 events that must happen for you to trigger the trade? All right, so we'll get into that. So number 1, number A, there must be elephant candle. The chart must originate elephant candle. Okay, if it originates elephant candle and it has fulfilled all of the above 3 criterias, then we'll go for buy. Okay, if it doesn't produces elephant candle but produces a bottoming tail bar, then also will make the buy entry. The third criteria is red bar ignored. What does that mean? That means in that particular location, a red bar must be overtaken by a green bar. If that criteria is met, we'll enter the trade. Alright, so we set the rules for buy entries. So we'll go to the chart and we'll see the rules. Alright, so rule number 1, 20 period moving average must be inclined. So here we see from here to here, this point, your 20 period moving average is inclined. So it fulfills the first criteria for buy entries. Let's see the rule number 2. 20 MA must be above 200 MA. So from here to this all positions, your 20 period moving average is above the 200 period moving average. So we meet the criteria number 2. Now the rule number 3. The price must be near the 20 period moving average. Okay, so now let's find out where are the prices near the 20 period. So this is one position where the price is near. This is the another area where the price is near 20 period moving average. This is the another area where the price is near the 20 period moving average. This is another position where the price is 20 period moving average. Okay, you see, this is far away from the 20 period moving average, right? This is far away from the 20 period moving average, but this is near the 20 period moving average. Okay, so we'll keep things very simple so that it is understandable to all the beginners traders. All right, guys. So now we wait for our trigger candles. So any of the 3 criteria, if we meet any of these 3 criteria, we'll be entering our trades. All right, guys. All right. So let's wait for any of the 3. So elephant, bottoming tail bar, and red bar ignored. So guys, so look at here. Here we find an elephant candle. What do you mean by elephant candle? A comparatively bigger in size, a bullish candle which is formed near the moving average is called elephant candle. Alright. So here we find elephant candle. So this can be our entry candle. Alright. Here we meet another criteria, that is red bar ignored. A red bar formed and this green bar came and overtook this red bar. So we meet the criteria number 3. Alright. Now here you meet the criteria number 2, bottoming tail bar. Okay, you see this candle? This candle has got very big tail into its bottom, right? So whenever this candle gets overtaken by a green candle, you enter. So this is your entry, first entry. This can be your entry. This can be your entry, and this can be your entry. Even this can be your entry. Alright, because we meet all the rules and we never trade against the rule. Alright, guys. Okay, so I hope this is clear. You can enter the trades now. So you must see your 20 period moving average is inclined. Let's say you are here. Your 20 period moving average is inclined. Okay, fine. Price is comparatively near the moving average. Okay, fine. We meet the another criteria. Now a red bar formed and this green bar just overtake this red bar. So we'll place our buy order here. Alright. We'll place our buy order here and we'll place our stop loss just below this candle. Alright. If we are playing a red bar ignored, so what is our reason for the entry? This red bar. Because this red bar got ignored, that's why we are making an buy entry, right? So this is our region. So we'll place our stop loss just below the region. Alright. So here we'll place our stop loss. This is our entry price at 1638. This is our stop loss at 1634. And guys, this is all yours. Okay. So this is all big money. Now you just keep watching the trade. Alright. Now you see the price is moving forward, but a red candle appeared. Alright. When a red candle appears, you must get tempted. Okay. The buyers must get tempted to buy. But normally what happens whenever a red candle forms in a bullish trend, buyers, the beginner buyers, get afraid of the trade. They are afraid that if the price will fall down and they will lose what they have already gained, right? let's say you have placed a trade here, and you are here at the top and you are making like, let's say, $200. Okay, now the price fell down here. Now you have just $100 in your account. Okay, now you get afraid that you might lose that another $100 too, and you close your trade here and you miss all the moves. Okay, so what I say is you must get tempted. All right, whenever you see a red candle in bullish trend, okay, because you wait for that candle to get overtaken. All right, so a red candle formed, another red candle formed, and this candle just overtook this red candle. So we'll place again another buy out here, and we'll place our stop loss below this candle, and again this is all yours. Okay, where is our third entry? We get a bottoming tail bar. All right, we get tempted. All right, a green candle came, it just overtook. All right, this is again our entry. This is our stop loss of 40 pips, and this is all yours, more than 100 pips. You see how many times you get the chance? You get the chance here, again you get the chance here, and you are following the rules. If in any period of the time you lose the trade, okay, so let's say you place trade here, your stop loss is this 28 pips, and if the price falls, you will just lose your 28 pips. But if you are following the rules very religiously, then I promise you guys will lose very rarely. But the hardest part is that you must do what you know. Okay, when you are capable of doing what you know, you become brilliant in that field, right? We know several things, like we know we should not smoke, right? It is injurious to health, even though people does, right? So knowing is one thing and doing is another thing. Knowing won't be enough. You must do it, you must execute it. Okay, guys? So here you see the price, the moving average, the 200 period moving average, all were together, right? In the same area. But here you see they are separated. You have price out here, you have moving average, 20 moving average here, 200 period moving average here. So they are quite apart. So this is, we are into a wide zone. So we came from narrow zone to wide zone, and now this is time to go back to narrow zone. Okay, so once we form this kind of situation, we are done. We have made enough money from here to here. We are done for the day. We go for walk, we go to beach, you go enjoy time with your family, whatever you do. All right, so I hope the buy setups are very clear, and I also went through the stop loss criteria. All right, I'll not be talking in details about take profit in this video because this is an art part, and I'll be making a separate video on take profit itself. Alright guys, okay, so now let's make some rules for sell setup. Alright, so many things will be similar for sell setup. Alright, so let's make some rules for sell entries. The first is your 20 period moving average must be declined. The second point is your 20 period moving average must be below the 200 period moving average. Alright, the third criteria is that price must be near the moving average. We do not do any changes to it. Alright, and the fourth criteria is very similar to the buy entry. Well, here also we look for elephant candles, but this time we look for red elephant candle, bearish elephant candle. Okay, and the second criteria we look for here is topping tail bar. Guys, we went for bottoming tail bar there, now we go for topping tail bar. Alright, when the tail is above, then we enter. And the last criteria that if mate will entry is green bar ignored. The rules are almost same, just there is difference in some colors, right? So sell entry rule number 1, 20 period moving average must be declined. We do not make sell entries if our 20 period moving average is not declined. Alright, we make sell entries only when your 20 period moving average is below the 200 period moving average. Alright, rule number 3, the price must be near the moving average. We don't take trades away from the moving average. We make only trades if the price is traveling near the moving average. It doesn't matter up or down, but it must be near. Alright, and the trigger candle must be elephant candle or a topping tail bar or green bar ignored. Alright, so let's go into the chart and let's see what is our criteria. So here we see, right, so I'll zoom it, guys. So here you can see your 20 period moving average is below 200 period moving average. We met the criteria, right? Your 20 period moving average is declined. We make the first criteria. Your price must be near the moving average. So this here the price is near the moving average, right? Here also the price is comparatively near the moving average. Here you see the price is near the moving average, but here the price is away. Here the price is far away. Here the price is away, right? So we must meet all the criteria out here, right? So we'll make our entries where the first entry we get here. Alright, we are into the live market and the price is already moving. A very volatile market. Alright, this is the evening time. So we'll focus on to our strategy. So here you see at this point we meet all the criteria. Your 20 period moving average is declined. It is below the 200 period moving average. It is near the 20 period moving average, and a green bar gets ignored here. Okay, a red bar came and just overtook this green bar. So this is our entry candle. This is our stop loss of 12 pips, and guys, this is all yours, more than 100 pips, guys. So whenever you lose very small. Whenever you gain very big. And this strategy will keep you into the game for very long time. Alright, so we see another setup. Here we see another setup, a green candle. We get excited. Okay, great. We do not place a buy here, right? Suckers will buy here. Okay, and winners will just wait for the opportunity for sell entry. Okay, a green candle, a red candle came and just overtook it. We just enter here, we just place our stop loss here, and again guys, we have more than 70 pips out here to be made, right? Now you get another entry out here, the price is near, you get one entry out here as well, but this is far away from 20-period moving average. That's why I said it must be near, right? A green bar is ignored here as well, but you see, you are like 65 pips away from the moving average already, so you will not entry, you will not entry even here, even though there was some profits to be made, but you won't enter here because your 20-period moving average and your price is separated. Alright, so we'll wait for them to come near. Alright, now it is near. Now we are waiting for a green candle to get overtaken by a red candle, or a topping tail bar to be formed, or a bearish elephant bar to be formed. Any of the three. So here you get a green bar ignored, right? A green bar formed and a red bar just ignored it. Your price is near the 20-period moving average, right? Your 20-period moving average is declined, and it is all the events are happening below the 200-period moving average. So again, we make a sell entry here. Our stop loss is 18 pips, and we again can book this 40 pips profit. Alright, so I hope these rules are very clear. I will just put these rules into the description box so that you can copy it and you can apply it in your day-to-day life. But again, as I mentioned guys, this strategy is very powerful, very powerful. Okay, you look, this is just how powerful this strategy is. According to my rules, your entry price will be here, right? And this is all yours. Alright, so this strategy is very powerful, but you just have to keep in mind that you follow the rules very religiously. Alright, you do not compromise with any of the rules I have mentioned here. You just do this, you practice onto the demo. If you do not increase your account, if you do not book some very nice profit, if you do not increase your account, you just comment below that my strategy, this strategy has failed and this is completely bullshit. You can just comment it. Alright, but I'm sure when you practice it on demo, it will be very helpful. Let's say for sell entries, guys, you see, these are all yours according to the criteria, right? So follow the criteria, and definitely this strategy is going to be one of the best strategy into your trading arsenal. Alright guys, so thank you so much for watching this video till now. If you haven't subscribed this channel, then please subscribe, please show some support so that I can make a detailed video on this topic and I can enhance your skills more towards this very simple and very unique strategy. So moving average is free, available in all the platforms. You go, put it into your chart, just see it as I see it, and you'll feel the difference. Alright, so thank you so much guys, stay tuned. Thank you.